Hey folks, welcome back to the channel. Today, a little different video talking about ecosystems. We know in the tech world, we have Apple, Samsung, Microsoft, iOS versus Android. All that ecosystem where you have a bunch of products, you like the company, it's convenient, they have very good integrations, and everything's all in a nice package in the tech world. But talking about finance, personal finance, we're going to explore if we see a rise of consumer financial products, banking ecosystems be the new future. Recently, we did some videos about the Chase Sapphire credit cards. We've known for a long time Chase has a very good lineup of credit cards. So does AmEx and a couple other credit card issuers. But is the future of this connecting the credit card products with your banking products and other products offered by the bank to create a smooth, seamless experience for the customer? Let's find out. If you're new around here, get subscribed, like the video. Let's get into it. So one of the most well-known and possibly best examples of creating an ecosystem is what Apple has done with things such as, the iPad. We have iPads, we have MacBooks, we have AirPods, iPhones, iMacs, Apple TV, Apple credit card now, Mac Pros, all that stuff, the Apple ecosystem. You probably know friends who have a lot of these devices, if not 2, 3, 4 devices with the Apple credit card. They've managed to create a seamless user experience and their customers are very loyal to the brand. They'll get the new iPhone, they'll get the new MacBook. And we even see this fight between Apple iOS devices, Android devices, so Samsung, Google, things like that. Other companies have tried to create ecosystems as well. Samsung, for example, have their lineup of phones, the Galaxy lineup. They have their lineup of tablets, headphones, laptops. They even have other devices, microwaves, kitchen appliances, refrigerators. And same with Microsoft. They have some cell phones in the past. They have tablets, computers. But it seems like Apple is the most successful example of that. Their tech products, especially their electronics, are so well integrated. If you use AirPods on your Mac laptop or your iPhone, it can transfer seamlessly. You only need one app for everything, one account for everything. It's all in one place. So the business goal of this ecosystem, we have to remember these companies, they're creating this experience for the customer. The goal is to get the customer to buy in and stay in that ecosystem. So the next time they need a phone, they're looking to Apple. The next time they need a laptop, they're looking to Apple. When they need headphones, they're looking to Apple because everything is so convenient. It's already been integrated. Taking that concept and idea and looking at the consumer finance of it, which is what we're interested in, credit cards is the major example for now. Chase, we all know, has one of the best credit card lineups out there. Starting from their entry-level tier, the Chase Freedom Unlimited, Freedom Flex, moving on to their Sapphire cards, Preferred, Reserve. They even have some great business cards as well. And that's just the Chase lineup. They also offer co-branded cards with Southwest, with Amazon, and other stores. The Chase credit card ecosystem is seen as one of the top-tier ecosystems in the credit card world because, one, they have really great products which give really great rewards. And that's what a lot of people are here for, the credit card rewards. Because looking at credit cards, you have so many different options. Why would you go with a credit card that is just worse across the board, worse rewards, worse bonus redemption options, worse perks and benefits, assuming you could qualify for the credit card, versus a credit card that has better rewards, better options, that have great rewards, and they also have a great portal, rewards portal that they built up, the Chase Ultimate Rewards Points. They've partnered with some excellent travel partners. It's well known for its travel capabilities, transferring points, getting value out of that through the portal, booking airfare, hotel. And recently, Chase has also rolled out some insane sign-up bonuses, especially for their Sapphire Preferred card. Over a $1,000 sign-up bonus for that card. And all of that is to try to get people to sign up for the card, obviously, but that's not where it ends. Even if Chase loses some money on that sign-up bonus, they're getting people into the ecosystem, not just the Chase credit card ecosystem, but hopefully they can push them into Chase banking products, Chase mortgage products, Chase loans, they can try to sell you on all that stuff after they've got you into the door. And this isn't exclusive to Chase. We know other cards have sign-up bonuses as well, but we're just talking about this because it's one of the better integrated systems. They have a Sapphire credit card ecosystem as well as a Sapphire banking product. So I think the branding and marketing is what sets them apart for now. Other notable credit card ecosystems, AmEx, you may have heard, they have a great lineup of cards as well. Discover, Capital One, they all have good credit card lineups. When we look into it, I think Chase has been a very well-known bank and they have a good credit card lineup. So the integration between that is especially notable. And although a lot of these big sign-up bonuses are targeted towards more premium credit cards, so this is typically an older age demographic, people who have established credit histories, established payment histories, I think there could be a shift to putting some of this stuff on the entry-level cards, maybe no annual fee cards with, good sign-up bonuses, good rewards, because that's where you can really get people. With the tech ecosystem, we see there are a lot of student discounts all the time. Usually when back to school time rolls around, Apple will throw in AirPods, Beats with the laptop purchase for college students. They know that if they can get them into the ecosystem, throw something in, maybe they're going to get that Apple laptop, use it, tell their friends to use it, and get a new one when their old one is ready to be replaced. Same with Samsung, offering headphones with their tablet purchases as well for students. Because if you can get somebody at a young age as a consumer, they buy into the ecosystem, they're comfortable there, they don't look to move, you have that customer for the next 50, 60 years. They'll keep on going back buying your products. We may look towards some of the entry-level credit cards to get people in, but nowadays the challenge is there is so much competition now. It's not just the traditional banks we'll talk about later. Financial startups, fintech companies seem to have a better grasp on younger people. They're more open to a digital platform, not having in-person locations, doing everything online or through an app. And people are just getting a little bit more savvy. Credit card churning, right? You can offer great rewards, but if most of the people there just stay for the rewards and dip, you're not actually getting the benefits out of that marketing budget to get people to buy into your product. But flipping the switch back to Chase, using them as an example, as a case study, they've already been known for having great credit cards, great rewards, especially their travel rewards. And I think from where we are now, late 2021, they are clearly the best ecosystem for travel credit cards. We just saw a new announcement boosting their rewards and perks on their Sapphire lineup. They're building out airport lounges exclusive to Chase. So we see that there is definitely an investment in this product. I talked about it in my last video. Staying proactive, keeping ahead of the game, because we know there are other companies trying to catch up. Wells Fargo, Citi, AmEx. But them having the foresight and investing into this ecosystem to maintain their strong brand is going to help them out in the future when the competition catches up. Because building out their own lounges, right? Before they were partnered with Priority Pass, airport lounges through them. I'm pretty sure Chase was paying them for access to those lounges, but now they have their own. It's kind of like Amazon. When they first started out shipping, they used other carriers. They didn't have the infrastructure built out. They were using FedEx, UPS, USPS, DHL, but now they've grown so big, they built out their own shipping infrastructure. Amazon ships, delivers their own packages now. They don't have to pay someone else to do it. It's kind of an internalized cost, and it's always going to be a lot cheaper in the long run. If you have the scale to do it yourself, do it well. That way, you can control all the aspects of it. You can control the experience. You can control the cost. So looking at this investment, and we may see other things even pop up as well. And where they are now, other banks are just going to be playing catch up. Whether it be AmEx or Wells Fargo, if they were to introduce lounges because they right now have partnerships, especially someone like Wells Fargo who looks like they are trying to catch up, if they ever introduce a new premium tier credit card, high annual fee, high bonuses, and they want to attack that travel segment, they're probably going to have to pay a partner to partner up with the airport lounges. unless they want to build up that infrastructure themselves, they don't really have a proven track record in that space yet. So they are going to be playing catch up while Chase has been ahead for a while now. And aside from that, their physical presence, the physical infrastructure, actual banks, actual ATMs, this also gives them an advantage over maybe smaller regional banks, credit unions, or just online only services that don't have a physical presence. If Ally Bank were to say one day they wanted to open up branch locations, that's going to take time and investment. Now, sure, they're cutting costs, but if they did want to have that for their customers, it would take some time to build that up. Now, continuing the discussion about ecosystems, they're not built up overnight, like I mentioned. And if we are now going to talk about other competitors, looking at other banks to try to build up their ecosystems, what exactly do they have to overcome and solve? I want to reiterate the importance and the business value of creating a good ecosystem, right? It captures customers, you bring them in with the hope of getting them to stay, customer retention, and hoping to sell them on new products. This is a sales strategy and tactic used in all industries. It's a lot easier to sell somebody when they're already an existing customer, when you are already having communications with them, they're using your products. And the first step is always to make sure you're making a great product. With Chase, with their sign-up bonuses, with their great rewards, if you're already into the ecosystem and you're making full advantage of that stuff, you might not have a lot of complaints. So when they come and say, hey, sign up for this bank account, we'll give you another sign-up bonus. Well, then you're more likely to listen. And they already have all your information talking about marketing, emails, phone calls, physical mail. They can send that to you. And you'll be like, oh yeah, I know Chase. It's not just some random bank reaching out, kind of like a cold call. This is obviously a lot easier than a cold call in a traditional sense. Same thing we see with Citi. I have the Citi double cashback card. I get emails, notifications, pop-ups on the portal all the time about Citi earning up to $1,500 if you open a new bank account, right? They're trying to lead you there. And when I log into other bank portals, they will always try to introduce me to something new. Maybe I'm looking for a mortgage. Maybe I'm looking for a loan. Maybe I'm looking for a business loan, student loan. All these different products can be sold to you when they already have you as a customer. So when you're trying to create a new ecosystem, the first thing you have to do is make sure you have a good competitive product. And I think the way to go about that is to start slowly. So Wells Fargo, I take as an example because for the longest time, their credit card lineup honestly was pretty bad. Nothing of note, pretty generic, 1% reward, maybe 1.5%. But then they came out with the AmEx Propel card, which was actually very underrated. Not a lot of people talked about it, but it was actually a really good card. That has since been discontinued, I believe, to new applications, but they've also now come out with a new Active Cash card and a new branded card with Hotels.com, more travel-oriented. The Active Cash card, 2%, a direct competitor to things such as the Citi Double Cash card, which has been looked at for a long, long time as the best flat-out rewards, not specializing in travel or entertainment, just flat cashback, 2% is pretty good. And the Citi Cash card, it used to be good, but honestly, it has dropped down a little bit. They've gotten rid of a lot of the extra benefits that you get, purchase protections, travel benefits, car rental reimbursements, all that stuff has been cut from the card. So we're seeing new competitors pop up with cards like that, with cards from. So I do really think Wells Fargo is taking a hard look at their credit card lineup. And I wouldn't be surprised if in the next couple of years they roll out with more premium credit cards, maybe starting out with a $95 annual fee card, moving up to that $500 annual fee card. We're going to see where they want to approach this. Do they want to take on Chase directly in the travel elite rewards segment, or are they going to take a more generalist approach with the Active Cash card, with a more general rewards, general everyday use card? Because for some reason, all of the high-tier rewards credit cards right now are kind of targeted towards travel. Chase Sapphire Preferred, AmEx Platinum. They all give things such as travel credits, lounges, travel entertainment focus. But maybe somebody could come up with a more general premium credit card. That could be a real differentiator, set you apart in the ecosystem. But the first part, you have to make a good product. As you saw with Citi, their new custom cash card, new exciting product, but when you look at it, it's not actually that great for everyday use. The 5% category is good. I would recommend that if you want to get it just to use that 5%, pick a category, get those rewards for that category only, use another card for your general spending, use another card for your travel spending. So you have to create a good product. You have to create a good customer experience. And I think branding is also very important. With the rise of these premium credit cards, believe it or not, right? Having a metal credit card, having an aesthetically pleasing credit card might actually be a selling point. We saw with the Apple Card. Nice matte white finish, clean looking card, all metal. When the Chase Sapphire lineup first came out with the metal credit cards, they actually ran out of metal for a bit because people were just into it. So good branding. They Chase, once again, the Sapphire branding makes it seem premium, makes it seem exclusive. It's not enough to just throw good products. You have to have the marketing, the branding to back it up. So also, people actually know about it. People are excited for the products. They're excited to use it. They're excited to stay within the ecosystem. And also just creating the culture and thinking of what you want to actually offer. We talked about this with Chase being a more travel rewards culture. They're a travel rewards portal. They're travel partners. All really great. They're known for that. If a new bank were to start a new ecosystem, do they want to target that or do they want to target something else? And talking about partners, that will also be a very important part. And one thing that could separate you from the others. Chase, once again, has partnerships with DoorDash, with Lyft, giving their cardholders extra rewards, extra bonuses. So finding the right partners to meet your customer needs is also going to be, not just with credit cards though, the entire ecosystem. You can bring in partnerships with your banking products as well. Fintech, a lot of the hype and growth in fintech is to help you do everything online. AI, managing your budget, visualizing things. And I think that's one thing where traditional banks have kind of fallen behind with their online experience, with their features. So building up that ecosystem, right? Giving you tools, maybe partnering up with platforms that can help your customers budget, that can help them do some financial planning, that can help them do retirement savings or just saving up for a big purchase. All of that stuff takes investment, whether you want to build it out yourself with your own developers or to partner with an outside third party that could do that for you. We can look at technology partners there as well. And lastly, you also have to manage your performance. You can't just throw money at the wall and hope for people to buy into the ecosystem. A nice sign-up bonus is nice, but if you're looking at the metrics, if there's still high turnover or if people aren't actually being sold on the other products, it's not going to work and it's not going to be financially feasible. How do these companies actually make money? With credit cards, we have things such as fees that are charged, interest, transaction fees, late fees, balance transfer fees, cash advance fees, or we have interest, a big part. When people don't pay off their bills in full on time, they're borrowing money, those interest rates are pretty high. And with bank accounts themselves, more fees, account fees, overdraft fees, check fees, late fees, and also the interest. And banks use that money, they lend it out to other people, they use it to invest. All that activity generates the money. At the end of the day, you're there to make money. There has to be a balance between rewards and profit. If your rewards are too good, you might have a ton of customers, but you might be losing money. That's also not good. You can lose money for a period of time just to get people to come in, run it at a loss, but at some point, you are going to have to scale it up to make money. I don't know if taking away rewards or benefits is the way to go because you might actually at the same time lose out on customers. So that's also an important part. There are a lot of challenges and things to think about when building up an ecosystem. And lastly, we have to address the issue of new competition from startups, fintech. As the world, as the economy, as technology has evolved, customers have new preferences now. We have more things at our disposal. We see reports saying that, there's been a huge rise in new users for these fintech, whether it be new online platforms, whether it be new app platforms. People are exploring these new options, maybe leaving the traditional bank. And the one thing that traditional banks have, especially with bank accounts, is terribly low interest rates and also the stigma of, past scandals, past fines, past histories. A lot of these large national banks have had some sort of scandals in the past, and with people being more conscious or more aware of the products that they're using, they might be turned away from someone like a Wells Fargo or a Chase who have had issues in the past with their customers, with fraud and with their customers. So they really have to, traditional banks, build up that reputation again. And if they do offer you a great rewards card, they offer you great sign-up bonuses, the consumer has to decide what's more important to me. Being with maybe a local, smaller bank, credit union, being with a new fintech startup, maybe they're more consumer friendly, they haven't had any issues with their customers, or actually personally benefiting from getting money in my pocket with the sign-up bonus, with the better rewards. That's going to have to be a decision that the consumer has to make. But the traditional banks, they can compete now, trying to regain the customer trust and loyalty by having new programs, making them decide between financial incentives or moral obligations and moral ethics. Right? Although those traditional banks have the user base, they have the customers for now, direct competition is always great. Whether it be from other banks offering new products or new startups, new companies offering products. We see releases such as the X1 card, other technology platforms coming up and trying to rethink the way that we do credit cards, we do rewards. That's great. Even if they don't really pan out, just having that competition, maybe one day some company will really get a nice product to push these banks and these companies to think about what they're offering. So I know this was a bit of a long video. My initial goal was to compare the ecosystems between Chase, AmEx, Capital One, Discover, but it kind of turned into a discussion of the future of personal finance, the future of banking, the competition that we're seeing. I might do another video about actually comparing the ecosystems, the products they can offer. There are a lot of websites out there already. If you wanted to compare like the rewards points, that type of stuff, I'll link some articles below. Let's say you wanted to go with the Chase trifecta versus AmEx points. Pros and cons are there. The math has been done. You can go check it out. But I wanted to do a more bigger picture discussion about this topic. So let me know if you're interested and what thoughts you have on this. Do you think this is the future? Do you think banks will try to roll out more products and integrate them more closer with each other to try to bring consumers to just stay there with them, much like an Apple or a Samsung or a Microsoft? I'd be interested to hear your thoughts about that. But that's all I have for today. Thanks for watching. If you liked the video, go ahead and hit that like button and get subscribed if you're not already to the channel. Really appreciate the support. Thanks for watching. Peace.